acquired all the issued units in Vividend Income Fund it does not already own. Mark Kaplan, COO of Arrowhead Properties, joins us now for more. Good to have you with us. Probably exciting times unfolding in your office, but perhaps if you walk us through what made Vivid such an attractive investment for you guys.
It was a portfolio that we looked at. We're limited to looking at other listed property companies that's got higher yields than Arrowhead. We always look to make acquisitions that have acquisition yields higher than our cost of funding. So we're limited to which funds we can look at. Further to that, it was a portfolio of larger properties with predominantly retail exposure, and it complemented our portfolio. It was a large portfolio with not a large number of properties. So it was a very attractive investment for Arrowhead.
Mm-hmm. Listen, I'm not too sure if this is one that you follow, either Vividend or Arrow, but...
Well, by chance, I'm sure Mark and I were in the studio when the first tranche of the deal was announced, so it's actually just following it through. I think that was for about 33%.
That's right.
And obviously that gave you a chance to look at it and see whether you liked it enough. I'm sure there might even have been escape clauses in that first contract. But now you've decided that you want to take the entirety.
Yes, so we acquired, that's right, just under the 35% initially. And we waited to make sure that we could acquire the rest on a similar basis and didn't overpay for any more of the shares. And it was a process that actually took quite quick. We made the first acquisition in December, and it's now been concluded, and the vote went through yesterday. Both of the Vividend shareholders, I think it was over 99%, and Arrowhead shareholders over 99%. So we had overwhelming support from unit holders within the sector. And it's not often one gets to acquire another fund that's both quality and yield enhancing. So it's an amazing transaction for Arrowhead. Very exciting times for us.
We made exactly that point last time, that you don't often get the best of both worlds. But I guess, the overwhelming point on this one is that bulking up is a very good thing to be doing, especially at a time like this, and getting a larger market capitalization. What sort of shareholder spread will you have at the end of this?
So, look, we were very fortunate when we listed that we unbundled from Redefine. So we started with a very wide shareholder base, more than a lot of our competitors, which gave us a very unique advantage. And we had a lot of liquidity from day one. But we listed with an initial market cap of 800 million. Once this transaction goes through, which will be, I think, implementation date is 4th of August, and there's a couple of things that will happen after that. But our market cap will be close to 6 billion. And obviously with the changing in the interest rate environment, and one can see that the consolidation in the sector, we were the first movers in the sector in terms of consolidation. Both ourselves and Vukile, with the acquisition of Synergy, were announced on the same day. And then since then there's been a whole host of acquisitions, and it looks like potentially 25% of the sector will disappear in the next 6 months. And I think it's important to be growing and to be liquid, and investors are being forced to make choices which companies to back.
This consolidation, sorry, Liston, just to interject there, will you be looking at making future acquisitions going forward?
We definitely will. It's part of our model. We said since listing to acquire revenue enhancing properties, and we manage the risk with each of those acquisitions. We have acquired 11% in Dipula, 22% in their B units. We've said our intention is not to be a hybrid. So when we acquire stakes in other companies, we would look to get either the whole company or properties in exchange for the shares that we have.
Why that particular strategy, though?
Our model is really to pay distributions that are growing much faster than the rest of the market. For example, last year the market paid around 7.5%, and we paid over 12%. This year the market's expected to have a cracker year with about 8% in distribution growth. Arrowhead will pay 16.8% in distribution growth. So last year we were 80% better than the market. This year we're more than 100% better than the market.
Just the story for me as an asset manager is to look at the outlook for the asset class as a whole. And it just strikes me that it's a fairly hostile environment where I see, just using eyeball research as I call it, a lot of shops turning over. I hear apocryphally that the turnover clauses are not kicking in. There are even some new malls coming to market which cannibalize the ones around them. It's not the best time for property. And yet there's a huge appetite, and there's certainly been the last, whatever you want to call it, 10, 11, 12 years when property has been the darling of society, not the last 12 months though. Yeah. How do you see the next 12 months?
Look, I think we think we called this consolidation correctly. I think it's going to be tough. We're in an interest rate rising environment. Cost of funding is going to increase. It's going to become more difficult to raise equity, and it's going to become more difficult to make acquisitions. As your interest rates and your cost of funding go up, bond yields are moving. It really means that the acquisition yields that we have to acquire have to be higher. And that means it has to translate into the physical property market. So I think the next 12 months are going to be very tough on the property sector.
Mark, just to close off with, unfortunately we run out of time, but will Vividend still remain listed, and will there be some kind of restructuring taking place?
Vividend will be delisted and will be a wholly owned subsidiary of Arrowhead.
Indeed. Well, that's where we leave things, and hopefully we'll be speaking to Mark Kaplan again in the future after a few more acquisitions in the industry. He's the COO of Arrowhead Properties.